All right, guys, what is up? You are back for another video at DataZero. In this video, we're going to be looking at the new GME filing. What is going on with it? Is it dilution? What is happening? I'm going to be showing you guys exactly what's going on with that document and what you need to know as GME traders, holders, and investors. Let's go ahead and hop in right now and break down what is happening and what has happened here. Now, as you guys can see, GME got a decent pullback to the downside today, starting from yesterday. You guys can see we started to pull back. We filled some of the gaps to the downside, which is good. We did create a gap to the upside here, and we do still have gaps to the upside as well, and we still have two gaps to the downside. So we filled some of the gaps to the downside. We've been trending mostly to the upside, and I'll be breaking this all down in the weekly outlook and prediction. You guys can see ever since I called for that rally here back before earnings, we've been trending to the upside. So we'll talk about what is happening here, but you guys can see we started to pull back here for the last 2 days. Now, why did we pull back? Some of this could be potential. Obviously, it's manipulation and stuff like that as well, but some of it could be potentially due to insiders selling. Now, we just got a recent filing today, and I'll show you guys what that filing is here, but I posted it here on Twitter/X. Is it dilution? And I told you guys I'll be showing you guys what's going on and digging into it and finding out. We did on the live stream, and this is for anybody who missed that. You guys can catch up here with this video. So this was filed here. It was came out October 2nd, and people learned about it basically overnight and here and heading into October 3rd. Now, is it dilution? And I'm going to break it down straight to the point. What is happening? This is called a mixed offering, okay? And I said whatever that is here, but I showed you guys that I'll be breaking down my findings. What it is a mixed offering. Gamestop files multiple types of securities, including common stock, preferred stock, and debt securities. This gives the company the option to raise capital through different financial instruments. So this means that they could sell common stock or preferred stock, or even use other instruments like debt securities to raise capital for the company. Another key statement of this, it's not immediate sale, and this is breaking down the document itself. It's not immediate sale. It's not saying that they're selling right now, okay? It means that they could sell in the future or whatever. If there's a storm coming up or whatever the case may be, they could raise capital in the event of emergency or whenever needed. So it's not an immediate sale at this time, so it's not diluting right now. So the answer is it dilution right now? No, but it could lead to dilution. Maintain capital access. Obviously, that's self-explanatory. They have access to capital when needed. And then also, this document could be related to partially the warrants, but I think it also does at the same time secure them the ability to make money in the future with AKA dilution, selling shares, common stock, preferred stock, or debt securities to raise capital, which would be dilutive in nature. Again, it's not happening right now, but it could happen here in the future. And then, of course, I think that the filing has to do with the warrants as well. Some observers have connected the timing of the filing to the existing warrants. The shelf offering would allow the shares of underlying warrants to be issued if exercised, because I told you guys if you do exercise the warrants, they do create new shares, which is also dilutive. So you do have to be aware of that. The warrants will be coming out October 7th. They got recorded today. So I mean, if every 10 shares that you have of GameStop, you will get one warrant, which allows you to buy shares at $32. If GME goes over $32, obviously that's profitable. If GME is under $32, you obviously don't want to exercise those warrants. Me personally, I'm going to be holding the warrants as long as possible, trying to limit that dilution and put pressure on the shorts every way I can. So I'm going to be holding on to those warrants. You guys can do what you want. Once it goes over $32, obviously those warrants will be profitable. And then you obviously have till the warrants expire to exercise those, and you have no obligation to exercise those as well. So you can do nothing if you want, if GameStop were not to go over the price, or if you just want to do nothing. So that's what's going on with that. Now, also, we do want to look at GameStop insiders. They did sell shares, and this could also have to do with the filing as well. On October 2nd, GameStop's insiders started selling shares. This is why we could have started seeing some of that downside right here. Now, also with the filing, a way that they can make money is a secondary offering. Existing shareholders can sell their own shares, which means, AKA what we're seeing here, shareholders like insiders could sell their shares for profit for the company and for themselves because of this filing. So I believe that is also due to the filing as well. Here's what we've seen from the AI here on Google, and then here's what we're seeing from ChatGPT on what a mixed offering is. The company issues new shares to raise capital, which is dilutive, and then a secondary offering, existing shareholders sell their own shares. And then this could be what a mixed offering is as well. But basically, we broke it all down for you guys. So this is why they are filing this file at this time. Because insiders sold shares, it has to do with the warrants, and it has to do with them being able to secure capital in the future. And we are seeing GameStop pull back because these insiders did sell shares. That is going to create selling pressure, and you do want to be aware of that, of insiders taking profits. You guys can see here, insiders took profits here on October 2nd. Mark Robinson sold $267,000 worth of stock. And then also we have Daniel Williams selling about 6,509 shares here on October 2nd. And ironically enough, October 2nd is when we started to see the pullback. Now, again, this doesn't mean it's dilution right now, but it does mean possible dilution in the future. Also, the filing has to do with the warrants itself, and it has to do with insiders selling. So this is why that filing was issued. Do we have dilution happening right now? No. Is dilution the reason why we're pulling back right now? No, but it could be because of some of those insiders taking profits here at these higher levels, and then we started to pull back. Now, I'll be breaking down what we're looking for here on the weekly outlook and prediction, but this is everything about the recent GME filing and everything you need to know as a trader and investor. If you guys made it to the end of the video, man, I appreciate you guys. Make sure you guys like and subscribe. If you guys want to help support the channel for absolutely free, you can share this content as well. If you guys want to support the stream, you guys can always hop by and drop a super chat. I appreciate you. Or you guys can check out the merch store, but you don't have to do anything like that. Just go ahead and leave a comment down below. And as always, y'all, make sure you have fun, stay safe, make money. Peace out, fam.